Good morning. It's Friday, August 14th. I'm Joe Terril, president of Terril and Company, private wealth managers in St. Louis, Missouri, back with an unprecedented update on the economy and investment markets. We call it unprecedented because we saw in March a worldwide shutdown of the economy and the results it had on investment markets. We, for the last 4 months, have been saying that the economy will recover from this, and we haven't changed our mind at all. The economic statistics that continue to come out around the world are positive. No, they are not back to where they were pre-virus, but it's the direction they're heading that is very encouraging. The housing statistics are doing really well. Auto sales are doing well. Number of people boarding through TSA security at the airports is increasing. All of these statistics, employment is better, claims for unemployment are better. All of these things have plenty of room to go, but it's the fact that month by month they're getting better, and it is encouraging. We believe by the end of this year, by the first months of next year, things will be back very close to pre-pandemic levels for world economies. The investment markets continue to be a tale of two cities, if you will. A glamour technology of, and I wish I would have been the first one to say it, but I'm not, but in the S&P 500, you have 6 stocks that dominate all the averages. The other S&P 494, if you will, are more industrial companies, companies directly tied to the economy, banks, energy, airlines, pharmaceuticals, paper, chemicals. These companies are still 40-50% off the levels they were pre-pandemic. This is the best place to invest. These companies in many cases have 4% plus dividend yields at a time frame when the Federal Reserve Bank is holding a 10-year U.S. government bond at 0.625%. We must avoid trying to play momentum buying the glamour tech. Apple, great company, don't get me wrong. People think I'm an Apple hater. I'm not. I use their products. But go look at the last 5 years worth of results. Sales, earnings, cash flow are all very mediocre. There's no spectacular growth there, but yet people love the stock, it's going to split, and they continue to chase it to unheard of multiples. You can throw Tesla, you can put Amazon, you can put Facebook in those categories of companies that are grossly overpriced. And most of the recovery that we have seen in the averages are really due to just a handful of companies. We believe there's a lot of opportunity in the epicenter stocks, the companies that are closely tied to the economy. We believe these companies can recover another 30-40%. With all of this said, we want to discuss for just a few moments that this economic recovery isn't free. It's been fueled in many cases by central banks around the world printing unprecedented amounts of money and throwing into the economy. In the United States, that figure is somewhere around $4 to $5 trillion. This, I'm not here to debate whether it should or should not have been done because of the unprecedented shutdown of the economy. We can debate that later, whether this was the right way to do it or not. But it has been done, and somewhere in the next 18 months to 2 years, we will have significantly higher rates of inflation, and we will have higher interest rates. The Fed is committed to the fact that they're going to keep interest rates at zero on a short-term basis and try and keep long-term rates down below 1% where possible. This is not going to work forever. At some point, they're going to have to raise interest rates to defend the dollar, to do something about the rapidly increasing rates of inflation. We are seeing this in prices. We're seeing this in gold prices. We're seeing this in some of the commodity prices now beginning to move. This week we saw this in even the government's own released inflation figures. So at Terril & Company, we're monitoring this very closely as to what this will mean for our portfolios. We have hedges in place by owning gold stocks and a gold ETF. They're doing well for us. We think they will continue to do well. But so will these industrial companies as the economy recovers. So to summarize, we remain bullish on a worldwide economic recovery. We like the S&P 494, if you will, and we think that things are going to look quite a bit different by the end of 2020 as we head into 2021. We thank you for tuning in today. Please stay healthy, stay safe, and if there are any questions of any type, as we've mentioned before, all of our phone numbers, email, fax, even my personal cell phone number is available to our clients. Don't hesitate to call us with any of your questions. And we'll be back in another 2 to 3 weeks with another unprecedented update. Thank you.